Imagine waking up one morning to find your investments have plummeted overnight. What if I told you this could be part of a planned economic shift? Today, we're diving into the shocking possibility of a stock market crash under Trump's influence, and why this might not be as accidental as it seems. Stay tuned, because what you're about to learn could change the way you see the markets forever. What is a planned stock market crash? A planned stock market crash sounds like something out of a conspiracy theory, but let's break it down. Historically, markets are driven by supply and demand, investor sentiment, and economic policies. However, some experts argue that powerful figures like Trump could manipulate these factors to create a controlled downturn. Why would anyone do this? A planned crash could serve as a reset button for an overvalued market. It could also redistribute wealth, create opportunities for new investments, or even serve as a distraction from other political or economic issues. While it may sound far-fetched, there are historical precedents for governments and influential leaders shaping economic outcomes to their advantage. Trump's economic policies and their impact. Let's look at Trump's economic policies and how they've shaped the stock market. During his presidency, Trump implemented massive tax cuts, deregulation, and aggressive trade policies. These moves initially boosted corporate profits and investor confidence, leading to a historic bull market. However, these policies also created long-term vulnerabilities. For example, the national debt skyrocketed due to tax cuts and increased spending. Trade wars with China and other countries disrupted global supply chains. Corporations took on excessive debt to buy back shares, artificially inflating stock prices. These factors have left the economy in a fragile state. If confidence wavers or external shocks occur, the market could collapse, and some believe this collapse could be orchestrated for strategic reasons. Signs of an imminent market correction. So, what are the signs that a crash might be on the horizon? Here are a few red flags. Overvaluation. Many stocks are trading at historically high price-to-earnings ratios, indicating they may be overpriced. Debt levels. Both corporate and national debt are at record highs, creating a precarious financial environment. Geopolitical tensions. Ongoing conflicts and trade disputes could trigger a sudden loss of investor confidence. Federal Reserve policies. Rising interest rates and tightening monetary policy could slow economic growth and hurt stock prices. While these factors don't guarantee a crash, they create a perfect storm for a potential downturn. And if this downturn is planned, it could happen faster and more dramatically than anyone expects. Why would Trump want a market crash? This is the million-dollar question. Why would Trump or his allies want a market crash? Here are a few theories. Wealth redistribution. A crash could wipe out overvalued assets, allowing new investors to buy in at lower prices. Political strategy. A downturn could be used to shift blame to current leaders or justify new policies. Economic reset. A crash could force a restructuring of the economy, paving the way for long-term growth. While these theories are speculative, they highlight the complex relationship between politics and economics. Whether or not a crash is planned, it's clear that the stock market is on shaky ground. What can you do to protect yourself? If you're an investor, it's crucial to prepare for potential market volatility. Here are a few steps you can take. Diversify your portfolio. Spread your investments across different asset classes to reduce risk. Invest in safe havens. Consider assets like gold, bonds, or defensive stocks that perform well during downturns. Stay informed. Keep an eye on economic indicators and market trends to make informed decisions. Avoid panic selling. Emotional decisions during a crash can lead to significant losses. Stick to your long-term strategy. Remember, the key to surviving a market crash is preparation and knowledge. If this video made you think, give it a thumbs up and share it with someone who needs to hear this. Don't forget to subscribe and hit the bell icon for more insights on the stock market and economic trends. Stay ahead of the curve, and I'll see you in the next video.